Next on stage, Pakning Luk, Binance's Regional Head of Business Development, will run us through the ways Web3 and blockchain coexist in the world of traditional finance. Of course, it's a really popular topic in the crypto community, and we are, of course, honored to welcome them to our stage. Let's give them a warm welcome.
Hello. Thanks for everyone's time. My name is Pakning. I'm working in Binance Pay. I'm the regional head of business development. So today, very happy to have all the panelists here with me to discuss about the traditional finance and also the new finance. And then here, maybe we can start with have everyone introduce themselves first. Danny first.
Sure. Hi, everyone. This is Danny Chong, CEO and co-founder of Tranchess. Happy to be here with everyone.
Hi, everyone. I'm Adrian. I'm the head of global partnerships for Binance USD or BUSD.
Hello, everyone. I'm Sylvain Prigent. I'm a co-founder and CPO of Societe Generale Forge, or SG Forge, to make it shorter.
Hello, everyone. I'm Jeremy Furster, head of partnerships at Cardano Foundation, and it's a pleasure to be here with you. Thank you very much, Binance, for hosting this event, and looking forward to a great discussion with the panelists.
Thank you, guys. So I think we can start this topic by having us to divide what's the relationship between traditional finance and also decentralized finance. Anyone want to give your thoughts about this?
I guess between finance and Web3, just a very candid kind of a description. The relationship is like a couple. I think between finance and Web3, they will be married someday, but at the same time, they need to grow individually to gain experience and to gain knowledge before they come together and bring about the best of both sides. So that's what I really think and see between finance and Web3. Sylvain?
Yeah. It's an interesting topic. Sorry for my English. I have a big French accent. But as you know, I come from Societe Generale, and we started Societe Generale Forge in 2018. And to be honest, at that time, the relationship between TradFi and blockchain, TradFi with and cryptocurrency, and now TradFi and Web3 were quite difficult. So it gets better. But there is one simple reason, I think, is for a TradFi, the dream is to become a DeFi. Because everything could be on-chain, everything could be, you can have settlement on-chain, maybe tomorrow if there is a stablecoin. And also, you can have a decentralized back office, where you can have all the reporting, you can plug your risk management, you can plug your accountancy, so it's really efficient. But in Europe, particularly, we invest a lot on market infrastructure. And one day, suddenly, there is a new technology that appears and that make what the infrastructure in Europe wanted to do suddenly. So, except before, there were a layer of custodian, of central security depository, and now the blockchain could disrupt all this market infrastructure that was put in place in order to make all the market, the financial market secure, and maybe could disrupt it. So the relationship are quite hard, but there will be collaboration and with formation, and we spend a lot of time in Societe Generale Forge in order to educate compliance, to educate risk, but also legal. And for example, we had a partnership with Polytechnique, that is a high school in French, in order to have a special training course with our Societe Generale collaborator. And now it gets better, and when we push new product, the discussion is quite easy. So it's, I think we will come.
Yeah, so I think from a traditional finance point, right, there's a lot of doubts and uncertainty about Web3 in the first place because Web3 was not well defined and it doesn't have a very clear and definitive structure. But now I think we can see that Web3 is coming forward, well understood that it consists of DeFi, Metaverse, and so on and so forth. And like it's going to be more accepted by the ways of traditional finance. Now, if we have to understand also, crypto is probably the first layer before TradFi want to go to before embarking on DeFi. DeFi is actually one notch higher in terms of understanding compared to just understanding cryptocurrency. But what we can see in the past 1-2 years, be it payment services like Visa, MasterCard, PayPal, they have already been allowing crypto assets to be buying, selling, and holding on over there. Even investment banks, the likes of Citibank, JP Morgan, they have started dabbling and even trading and provide market-making services on crypto. Private banks also are allowing clients to be able to purchase crypto assets via the services. And most importantly, like the big giants in terms of asset managers, BlackRock, Fidelity, have been investing money into companies like Circle. I think more importantly, on the regulatory development perspective, we have seen like France, Italy, giving out licenses to operate on crypto for exchanges of our payment services. Singapore as well, this has been happening. There are more licenses coming out to allow payment services, and also recently announcing the possibility and the in-depth look at DeFi applications as well as tokenization in Singapore. So I think we are actually moving on quite well. In fact, I think the key importance now is not like when they will converge between TradFi and Web3, but what are the bridges that will be converging between these two entities?
Agree.
Yeah, I also agree with what you mentioned about, we can see a lot of partnership between the TradFi and also Web3 space. So I also have some experience to share about the partnership, but we will share later on. Yeah, so I have another question to you guys. To some traditional finance and blockchain-based financial service haven't always been complementary. Are we looking at a period of time to continue to competition in the future, or there is any opportunity for cooperation?
Yeah, so from my perspective as a representative of the stables business, I think from an outsider perspective, it looks like there's quite a bit of competition, there's potentially some friction, but from what we see in all the conversations that we've been having with multiple payment parties, gateways, banks, frankly, even rating agencies, the reality is that everyone's trying to figure out a way to actually converge and cooperate with the crypto community, with the stables as an initial entry gateway into the space. And from our perspective, frankly, the more regulated we get, to some extent, it's actually going to speed up this level of adoption and effectively mass adoption of the crypto community. And the reason behind that is very simple. A lot of TradFi players are themselves highly regulated entities. So the irony is that we need that level of regulation to kick in so that these regulated entities have that level of comfort to start to interact, converge, and cooperate.
Yes, on this topic also, I will try to be to give some example. And I remember there is a panel yesterday where David Prince talked about we need to try to do, even if it's not perfect, it's important to do some small step to try to bridge TradFi and DeFi. And for example, in the Societe Generale Forge, it is what we want to do. So we, for example, next year we would like to open, we hope to open a refinancing solution with MakerDAO for our security token. So it's a first good collaboration with a DeFi blue chip entity. But it's not only on this way. We want to make the DeFi ecosystem stronger. And we want to bring some security tokens, so let's say some real-world asset yield in this ecosystem. We had some discussion with big DAO that are interested to buy security tokens, so some kind of security token with low risk yield, because they want to diversify their treasury. They don't want to have only crypto asset and even stablecoin. They want to have traditional finance asset. And also because we bring to the ecosystem a token-based solution, it is easier for us to integrate in their solution. So it's quite practical. And also the other advantage is today, unfortunately for the DeFi, the yield is better. We can pay better yield than compared to let's say low-risk stablecoin strategy. So it is win-win for both sides. And the same idea, we also have discussion with a protocol, a product of some DeFi ecosystem, of the DeFi protocol, in order also to integrate this kind of security token and to give access to their user to this yield. So overall idea is to I think all the collaboration will come next year or maybe in 2 years, and it's really exciting because at the end the end game is for bank, for financial institution, to give access to their user to the cryptocurrency ecosystem. And it is when this time will arrive that cryptocurrency will come mainstream, DeFi will come mainstream, because we have a lot of users and they are interested now, but they want to have a regulated entity that take care of all the constraints like private key and all the insurance that need to do for us.
When we're looking at this whole topic of traditional finance or DeFi, it's all boiling down to leveraging public infrastructure for financial and social systems. Now, the convergence will happen as the infrastructure builds its maturity. And we have to look at the value chain of finance in general to understand what is the value for Web3. And a lot of this can be done in terms of the definition of digital assets. So beyond trading tokens, which represents value, what about the economic identity of assets? And how does that lead to more cost-effective and more inclusive platforms, for financial services? So one area that we look at is that the definition of an asset itself and being able to bring on-chain the ability to authenticate and validate an asset as, real. When you're able to do that, you're able to then go through the flow of transactions and have that actual, that chain of records that brings out the ability to track the assets from its origin. And that's a major benefit that you need to have in compliant systems that's leveraging public infrastructure, such as blockchain technology.
Yeah, that's very interesting to use how traditional finance use blockchain technology to validate the assets. So it's very interesting for the two space to work together. And then personally, because I'm working for payment, we also partner with some traditional finance institutions like Visa card or MasterCard to launch our card program. So as you may aware, in France, we already have our Visa Binance co-brand card launch, so that users can actually use their Visa card just like normal to spend, maybe buy coffee at retail shop, and then they can, the amount will be deducted from their Binance wallet. So there are lots of cases about this collaboration. So I think we all agree that for now and in the future, cooperation is more than competition. So I have the third question. From your experience, what are the areas that traditional finance has the best chance of successfully integrate digital assets and blockchain-based services?
So I wanted to actually add for this, right? It's very important that whether it comes from traditional finance or from crypto space or from Web3, we are actually missing an intermediary as one of the bridge to be bringing both sides together. Now, we know for a fact that on one hand, there's a lot of traditional finance type, be it private bank, external asset managers, funds. They are trying to get into DeFi, but they don't have the technical know-how, they don't have knowledge, and I have to admit, like one of my friends who's an MD in a bank actually came to me and said, Danny, can you teach me how to use MetaMask and Trust Wallet? So it's as basic as that. There is that definite lack of knowledge on how to proceed. On the other hand, there is DeFi. Very good in what they do. There's innovations coming out. There are products that I think is of very good value, but not strong in marketing and definitely has no way to kind of bridge into traditional finance. So what do we actually need? We actually need an intermediary. Hopefully this intermediary can be also regulated and will be the entry point that allows all the traditional asset type of institutions to be bridging into DeFi. So what do I mean by that? Like if you're asking some portfolio manager of an asset fund to go and use a wallet to do auto staking, compounding, and make sure that he's on the correct chain, blockchain network, he's going to struggle. But if there's an intermediary who's licensed and who provides mark-to-market on a daily basis for them, who actually helps them convert from fiat into crypto and crypto back into fiat when they want to, obviously that sorts out all the problems that they have. And at the same time, when these institutions are investing via this intermediary into DeFi, they are also gaining knowledge and experience themselves. So this intermediary perhaps is a very important medium that we need to consider looking at having. And maybe that can come with the help by regulators also to ensure that there are intermediaries who can help deliver this. Someone to govern, someone to look after the experience into DeFi, and someone to actually help grow and educate as well.
Yeah. I totally agree with you. And in AG4, we want to be prepared for this. So we want to know if we will be allowed to offer cryptocurrency to our customers. So it's not the case today. That's why we are on security token. But we want to build this infrastructure in order to be ready. And for example, we have a partnership with Metaco in order to bring this kind of asset and all the security. And that's why when I see the question, the first use case, and I think is the case for all the banks, is custody. Custody is really the basis for the integration in order to offer all the security to our customer. And after that, of course, there will be, as you said, stablecoin is an important brick, and maybe we can have a word on this later. But custody and stablecoin for me the two main points today. And after that, we will have a lot of use cases around that.
Yeah, I think from the stables perspective, it's quite clear for us. We are obviously going to be a base layer currency for Web3. The real question in my mind is really regarding what kind of base layer currency and what kind of shape will it really take. And to me, it's pretty simple. We've seen the ongoing push for regulations, both in the US and in Europe. It's very much going to have to follow a certain pathway of regulation. So when you boil it back or you pare it back down and you look at the stables that are out there, you really need to have a discernment as to what is the right stables to really pick and adopt. And the reality is that whether a stable is regulated or claims to be regulated, there's a lot more investigation and due diligence that needs to go into play. Does it have a primary prudential regulator? Are the reserves properly managed in safe cash or cash equivalents? Are they audited? Do they have monthly attestations? These are just little points that actually don't seem very, very important at the outset, especially when the markets are strong. But when you have situations where we saw in the last couple of months of what happened, they start to take a real sense of importance. And I also like to point out that in certain cases, you really do want a bankruptcy remote structure, which is something that we are quite proud at BUSD to offer. Because at the end of the day, you really do not want cross-contamination risk when the issuer, if the issuer ever faces a problem. So some of these just key points that we actually look at when we evaluate both our peers as well as the services that we are offering to our end users.
I mean, regulations is a very important topic, and it really requires collaboration within market participants. And so at Cardano Foundation, we're always promoting that there should be frameworks which are efficient and future-proof. Because when we're looking at the space for digital assets, it's not just stable coins, it's also cryptocurrencies, it's digital assets, it's NFTs. If we're looking at the type of blockchain you're using, it's how do you view staking rewards, or how do you actually have a system to evaluate the different types of blockchains that are proof of stake or proof of work blockchains. And the space will only continue to innovate and diversify, which is good but challenging. And that's part of, I think, why we're here today, is we all represent different parts of that value chain. And we are all the users and the benefactors of seeing blockchain technology become more mature and become more adopted within regulatory frameworks. One side of this that's commonly not talked about so much is actually how traditional finance can leverage blockchain technology for reporting. There is a higher demand than ever before on getting information for how funds are being deployed. What is the actual social impact that's occurring here? And there's only so much that you can do within an annual report to actually tell these stories. And one good thing about NFT technology is that ability to create these descriptive stories within a digital asset that you can have third-party validation to say, this is the real effect that has occurred from, this type of finance, or, these assets that's been, collectively bought by groups of individuals, and, seeing that progress that's occurred from this.
Thank you. So thank you very much for sharing your experience on this. Then it comes to the next question. One of the crypto's biggest innovation has been stablecoins, as Adrian just mentioned. It's taken a traditional finance concept, fiat, and successfully digitally transform it. And what are your thoughts on the potential role of BUSD and other stablecoin in the metaverse and Web3 world? You just explain a little bit for us. I hope you can share more to the audience here.
Yeah, I think from my experience and from what I've seen, essentially, when we talk with regulators and we talk with payment partners as well as banks, the real underlying thesis behind it, or the real underlying use case for it, is ultimately regulated entities want to deal with other regulated entities. It just makes sense from them from a TradFi perspective. And actually, it actually helps in terms of mass adoption. If we look at the universe of crypto or the community right now, on a bullish estimate case, we're looking at potentially anywhere between 5 to 10% of the world population having touched crypto, which means there's still 90% out there. And in essence, to have that level of adoption, to have that level of comfort for the masses to adopt it, you need to have some form of regulation. Now, I spoke earlier in parts about what really defines a regulated stable, as from our team's perspective, primary prudential regulator, conservative reserve management, audited financials, bankruptcy remote structures. These are just some of the things that we offer at BUSD. And I think the users have really responded to that, especially given the fallout over the last couple of months, which is why, from a BUSD perspective, we've just breached the $20 billion market cap level. We are now clearly the third largest stablecoin in the world, and we are the second most actively traded stablecoin out there. So I think users are speaking, and they're voting, and they're doing more due diligence, and therefore, that's just only going to help the adoption. into the metaverse and the Web3 space.
Yeah, on this point, it's yes, it's really important to have a stablecoin that is accepted by all market participants, so accepted by DeFi, but also by TradeFi participants. In my business, so we do security token. If I don't have a stablecoin, to be honest, it's quite difficult to settle one leg in tokens, the other leg in cash. And today, every TradeFi participant are waiting to know what will be the regulation for stablecoin. So as you know, in Europe, there is a big regulation that is called MiCA for digital asset, but also for stablecoin. And there is another one that is called pilot regime for all about security token. So on the security tokens, the law is quite good because there is a high threshold. I think it's $9 billion for an issuance. But on the stablecoin law, it's incredible because the regulator has been very shy, or I don't know if they want to use DeFi regulation, stablecoin regulation in order to regulate DeFi. I don't know, but I heard a rumor that the threshold would be 200 million. So we cannot do anything with the 200 million as a market cap for Euro token or US token in Europe. So I think there is also a discussion yesterday on this topic, and I get the opportunity if a regulator hear us that you need to do something on stablecoin, because in this case the security token will not explode or will not grow, and the DeFi ecosystem also will be difficult, and at the end we will use other stablecoin in other jurisdiction, and for the sovereignty of Europe is not good. So if you hear me, please do something. Thank you.
Thank you. So here comes to the last question. As some of the main facilitator of Web3, blockchain networks play a large role in the topic at hand. Can blockchain networks build up relationship with traditional finance in a way that they have decentralized finance projects? Anyone want to share?
So decentralized finance has a kind of organic growth curve to it. There are thousands of entrepreneurs and developers and fintech aficionados who join the revolution in blockchain as they value what decentralized infrastructure can bring. So there is a natural kind of just response to this growing trend. Now, but their views on this is being the early stage innovators, the builders, and trying to understand what type of new solutions has a product market fit. Now, when we're looking at the space of traditional finance, there is an outreach strategy which needs to be made, because now we're looking at mass market solutions and the institutionalization of blockchain technology. And it really requires a direct approach of doing workshops, building in industry groups to help share this education and understand, do these solutions work only on the edges, or can it be something that is really delivered mainstream? And it also depends on the application. So one of the things that I'm happy to announce here is that with Cardano Foundation, we are announcing today a partnership with the National Wine Agency in Georgia, which is to use the Cardano blockchain to authenticate and validate their wines for export markets. Now, that's not just a blockchain native solution. It requires an onboarding system or on-ramp for purchasing ADA in order to make these digital assets work. So is that done in a compliant way, or are you doing an OTC solution? So it's an ongoing conversation of building these relationships to ensure a multitude of applications and use cases.
Yeah, if I can add, I think between blockchain networks and building up relationship with traditional finance, there are actually lots of ways to do it. I've already mentioned the one way to do it, which is to go through an intermediary. Now, they can also, of course, go through DeFi, which may be able to produce products that, like a TradFi can use. And in fact, there's other ways in which blockchain networks can go directly and be used by traditional finance. I think one very obvious example is the distribution of maybe a bond. A bond is always like a minimum threshold amount of like how much you need to commit before you can purchase a share of it. But if you are actually doing it over blockchain network, the efficiency of it is high per block size is small, meaning to say that you both will be able to disseminate to a lot more people, and also per cost of like distribution is much lower. There's also the fact that a few of us have already mentioned earlier, reporting, transparency. Well, this is something that traditional finance needs. This is something that regulator needs. And with kind of a blockchain network able to show all the transaction that's possible, instead of like a traditional investment bank where you need to do manual reporting, perhaps once the transaction is on-chain, everything can be sieved out by regulators or whoever wants to look at it transaction by transaction, and using big data analysis, you'll be able to get the information and kind of like the big picture that you're looking at.
I think from my perspective, there's also this element of continuous, essentially really pounding the pavement of continuous education with the TradFi space as well. Like you have some very forward-thinking, savvy financial institutions that have already adopted and embraced blockchain, but there's actually a lot of other TradFi firms and institutions that are slightly slower to the pace. And it is actually incumbent on blockchain networks, stables like ourselves, to continue that education effort, that community building effort, to explain to them how we want to approach and grow the broader space. And that actually increases the comfort levels, and with regulation coming in place and compliance with regulation, that comfort level can only increase, therefore the adoption can only increase.
Thank you very much. So thanks for all the panelists here to share your experience on TradFi and also Web3. And also thanks for all the audiences here. So it's the end of this session. Thank you very much.
Thank you, everyone.
Thank you.
Thank you.
Thank you so much, Pakning, and all of our panelists for explaining how this complex relationship can also be complementary. It's super important, obviously. We are going to take time to stretch our legs and have a quick coffee break, but before we do, what is on after that?
So we'll be back in approximately 25 minutes at 3:20 local time, for any of you that are connected from a distance. We have some great sessions just before closing the event. We'll take a look into the future of Web3. And finally, we'll have an Ask Me Anything session with CZ, Binance's founder and CEO. So a lot to look forward to. Go grab a coffee, and we'll be back in about 25 minutes.